Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, James DiBiasio. If you like this program, please subscribe to the newsletter or to the feed, like it, share it. Sharing is caring. Our guest today is Sopnendu Mohanty, the Chief Fintech Officer at Monetary Authority of Singapore. Sopnendu and I spoke about how the MAS is approaching sustainable finance, the way that it's helping encourage the industry and its fellow regulators around the world come up with practicable ways to deploy technology and fintech to help shift the entire industry to a new way of doing business. But what is that new way? What are the challenges? What are the opportunities for people in the fintech space? Sopnendu, welcome to DigFin VOX. Great to have you.
Good to see you. Good to see you healthy and still doing okay.
Everybody, yes, healthy and still doing okay is, I think, for 2021, a reasonable benchmark. But I think the idea of we're not really here to talk about coronavirus today, but I think it does sort of raise the issue that we do want to talk about, which is, humankind's impact on the environment and then how we deal with the financial and fintech aspects of that. So you, as the Chief FinTech Officer at the Monetary Authority of Singapore, have been heavily involved in helping MAS develop its green initiatives and so on for sustainable finance. So why don't we just start kind of, high level break. I know you guys put out a big initiative sort of late last year, for people in financial services and the fintechs. What do they need to know about this?
Well, Jim, as you rightly pointed out, that some of the coronavirus is also reflective of our shift we got to make, and that's clearly it has created that urgency more than ever that we should start doing this shift, this transition. And I'm using the word transition very carefully, because many times you hear we move from brown finance to green finance. But I'm going to speak in Asian context here, because in Asia, generally, you can't just live into that green finance straight away. There'll be a transitory step to get there. And if you look globally, numbers are quite big. Some say there are $23 trillion worth of sustainable finance going into the market in the next 10 years. The market itself is growing very, very rapidly. In terms of investment, of people putting money behind the green assets. But I think one of the things we got to understand that in Asia, still we are on the path of some kind of a growing urbanization. And still today, 45 million people in Asia don't have access to electricity. And fossil fuel is the most common way to get energy sources. And so Asia's shift will be very, shades of green. We move from brown and slowly some light green, and then get to the green, the end state green part. So as we transit this shift from brown to green, there has to be a thoughtful transition in terms of what kind of data set we got to have to make that shift. How do we process the information which comes through us so that we are making the right investment as we shift to this new green finance and sustainable finance? We got to also start looking at that we have right technology behind it, because a lot of this choices you're going to make or where you're going to invest requires a lot of data to be analyzed, a lot of data to be collected, a lot of data to be stored and should be also trusted in many sense, because you don't want to get in a situation where you are where your data points are questionable in many ways. So we are in that point of time where we are making the shift. We have understood that we will make that shift with a lot of urgency. The capital outlay is strong. The intention of both from regulatory side, policy side, government side, and the industry is quite strong in terms of putting money behind this shift. So Asia will see a lot of this shift happening very, very quickly. Almost every regulatory policy announcement you see green finance, risk management related to green has become part of the narrative now. And everybody's thinking about a chief sustainability officer. So this has become a top priority for Asia, and for the right reasons, because if we got to make that shift as soon as possible. And so similarly, MAS made that announcement last year. Our government also has put a 2030 Singapore Green Plan. We are putting resources behind even universities, so they're teaching the new leaders of the skill set we required to deal with this shifting financing requirement. So quite a 360 view of what is happening in the green space in every possible way.
A lot of financial institutions are trying to work out ESG style policies, and sometimes in response to regulation, and sometimes to shareholder requests. What, as a regulator, when you see these, how do you differentiate? Or I mean, is this an area for a regulator, other than just compliance with whatever regulations you put out? In a sense, are how do you have a feeling that you need to evaluate the worthiness or the credibility of some of these ESG initiatives?
Well, ESG, when the S and G is far more complicated than E. So what we are talking just now is just E only, the environmental related data. And I mean, Jen, we got to understand that the risk is real. By some estimate, trillions of dollars of assets are already under risk. Most of the coastlines are holding assets, which is subject to the rising sea level. So financial assets will be under stress in years to come. So it's important for regulators to step in and make that as an urgency, so that we understand the real risk behind this assets they're holding. And if you want to do a stress test of how the asset is going to stack up to, and you put the green lens on that, the S and G lens on that, there'll be a real problem to deal with. So if you don't take that regulatory, make the regulatory part of the regulatory construct, we may end up in a big crisis, bigger crisis than green financial crisis, the global financial crisis. And this crisis is irreversible. You cannot reverse back. You cannot put money behind to fix the issue. It is a permanent damage to the assets. It's a permanent damage to the place we live and we breathe and we spend our time. So there is this permanency in this whole risk. So you want to constrain that, restrict that, and find a way to get out of this crisis. So the regulatory construct is already there as part of the requirement for the banks to report their risk management framework for looking at the asset and against the lenses of ESG.
Do you see a bigger change coming for financial services around these sustainable issues in the way that it is organized?
Absolutely, no doubt about it. No doubt about it.
Can we get some idea of what that might look like? Because it's not just let's tick a box and we add a few factors to my portfolio risk process, right? I mean, there's more going on here.
Well, I think first thing is that you have to start doing some kind of analysis on your assets. And see how much they're exposed to the ESG elements. Mm-hmm. And then you look at then you ask this institution about the transition path. So there's a regulatory reporting requirement. There's a taxonomy which has to be developed in terms of how do you report this. It has to be a common standard so that we are consistently reporting across different asset class. So there's a whole piece of work being generated in terms of getting the taxonomy right. There's a whole piece of work going around getting the data collection right. There's a whole piece of work going around how do you report this, and there's a whole piece of work going around that once you have this data, what are your transition plan? How do you make that shift? So there are many layers of regulatory requirement which will start coming up as we go through this space. So reporting, taxonomy standards, provenance of the data. The transition plans will be part of the whole regulatory expectation as they get into this more and more deeper. So I think this is something every FI, every regulators will start making this as part of their risk management framework.
How do you deal, you're a regulator, how do you deal with the issues of trying to harmonize some of this stuff? So whether it's ESG or whether it's just normal day-to-day business that has nothing to do with this, and any bank or asset manager or even fintechs will tell you that particularly in a place like Southeast Asia, because every regulator is different, it's super difficult to scale. It's very difficult to to operate cross border unless you yourself are so huge you can just make it a cost of doing business. So because of the urgency around some of these issues, are you finding that in your talks with your fellow regulators in neighboring countries, that is there a sense that these things can be harmonized, or are we still back to, well, Singapore is very different than Indonesia, which is very different than Thailand, and yada yada yada?
I absolutely, because asset doesn't get created where you are regulated. It is all over the place. The assets are getting created in different countries, different jurisdiction. So the regulatory or the policy alliances around this is a must. So that first and foremost, the taxonomy has to get standardized, and I want to re-emphasize here, because the taxonomy could have a different nuances based on the market you're operating, because as I said, every country have a different timeline of how they switch. Every country has a slightly nuanced definition of the taxonomy itself. So there are these differences, but within a reasonable limit, if differences exist, it's not a problem. But broadly speaking, regulators are talking to each other, policymakers, the green side, the ESG policymakers are talking to each other, trying to get the taxonomy right in Asia, Europe, and many other places. Now, that's one part of the big work. Of course, then comes the disclosure, because you get your taxonomy right, but are you comfortable to disclose this data? And the data disclosure can have multiple layers of complication from an individual institution level, at a state level, at a country level. There are all kind of layers of filters to go through. So getting a reasonable trusted disclosure process, a trusted taxonomy or common understanding of taxonomy, and also how do you verify this data? Because unlike other things, green data is actually sits at the endpoint of where the assets are created.
It's a factory or an asset or something.
So it's the endpoint, right? So you go to you think about it, you just have to go and find a way to collect the data at the endpoint and bring the data to some place and make that sense out of those assets. So data distribution, data collection, and data storage and data processing becomes a huge part. It's the same issue you're facing with the data issues around the world in terms of how do you move this data across multiple jurisdictions, because a lot of other impact of this data. The data has got other issues also. It can be politically very complex. So there's a data issue to be dealt with. So broadly speaking, yes, there is a discussion. And the incentive for that, I would say the incentive for that lies with Jim, is that the new financial incentive are for green projects, green assets. So if you want to have access to the new finance, there is a green obligation being built into it. So there's an incentive being created for accessing this capital. Hence, there's a shift of behavior so that you can access this capital. So there's this incentive being built around, so the shift is happening.
What do you see happening in the space of innovation and technology to foster all of this? Fintech, of course, predates these issues, but do you see it being put to good use in this context?
We looked at some interesting data set, and roughly speaking, the financial sector today has something around 10 to 20% of the data you need to know for green reporting or to understand the green behavior. 80% of data actually sits outside the financial sector, health sector, transportation sector, travel sector, hospitality sector. That's where the data exists for you to do a comprehensive view of the green finance you want to construct against. So fintechs, interestingly, has the natural ability to collect this data at the endpoint. Because think about all the payment service providers. They have all the data about where you shop, where you live, what stuff you're buying. So imagine this whole data set they have can define a certain amount of green behavior or a sustainable behavior in your day-to-day life. So fintechs by design are best equipped to able to collect the data, make sense of it, and plug it back to the financial sector for a truly end state comprehensive green finance product construct. So that's one big advantage. Second, the rise of blockchain has now become a very, very useful tool in this space, because the one thing you want to ensure the data are trusted. It's not something get manipulated on the process of getting collected. So the whole DLT blockchain technology will become very, very handy in this whole process. More going deeper, look at all the trade finance technology development happening. You want to ensure the sources are sustainable. You want to ensure that they're moved in a sustainable way. The goods are moving in a sustainable way. So this whole supply chain finance, with all the technology going behind it, becomes a critical component in the infrastructure for collecting green data and making sense of it. IoT devices, this will be very critical for us, because these devices are our endpoint devices. They're going to collect data, stored in a trusted way, encrypted, then transferred to a certain place for understanding the impact of the finance you're making. I'll tell you one example. You may go and check it out. When the Fukushima disaster happened in Japan, bunch of scientists and engineers wanted to understand independently the radiation level and the atmospheric, the impact on the atmosphere in terms of
the risk of radiation. And
yes. So they were quite smart. The bunch of people developed small IoT devices, mobile devices, and they distributed among people in Fukushima area. And they started capturing independent data about the atmosphere, and that data went to cloud. And today, if you go to the website, safecast.org, globally, people are holding these devices. It's called citizen-enabled data collection process, which you and me can start collecting data from where we live. And if there are air polluting industry near us, it will quickly reflect independently the data that there's something wrong with the asset getting created around us. So there are a whole piece of technology revolution, methodology being created, devices being generated so that the environmental data start getting in the first pass, which is get the data collected, store it, transmit it, and hence we can build the right analytics. So that's where technology and the fintechs and the whole digital transformation is helping this green process.
From a regulatory point of view, this raises a few questions. First of all, if you end up with somebody with a lot of that data, if one institution or organization goes from 20% to 80%, that's a lot of information for one pool of users or influencers. Is there a regulatory issue there with making sure that this data is used properly?
Very good question. Yes, so and more importantly, I think the first, as I said, the data has to be collected responsibly, and I think the answer lies in how do you make the taxonomy more public and acceptable to everybody. If the taxonomy is well understood, then the data coming in, you are processing the data based on the taxonomy, and the taxonomy is something is not a secret. So that transparency of the taxonomy becomes critical for ensuring that people are comfortable with the data set being used for understanding the green shift. When I was a couple of months back, so we use the frame called 5 T's. First thing, you have to get the taxonomy right, then you have to get the technology right, then you have to apply the technology to the transition we're trying to make, and then you get your asset getting transferred from brown to green, and what remains, the stubborn brown asset, you tax them heavily. So that the 5T processes will kick in as we think about technology, taxonomy, transfer, transition, and then taxation. So that whole thing will come as a process as we make this transition.
Do you have a sense of how long that process is going to take?
It will. It's a long way. It's a long way. I think the challenge is, I go back to my point, the challenge is data. And you also made a good point that how to ensure this data is not abused, how to ensure the data is properly stored, how to ensure data is not manipulated, how to ensure the data is the incentive behind such data is appropriate. If I decide to bike on a bicycle back to office every day, and I'm willing to send the data to somebody who can give me a carbon point, how to ensure that my data is not getting abused and it is used for the purpose I'm trying to share my data. So the whole set of thinking has to be built. But I must say, the speed at which tech companies are pushing through the green piece is quite amazing. I think they'll be ahead of the race in many such areas.
One last thing I want to ask you about is the other initiatives that you and the MAS SOP have been pursuing over the past several years. I just want to ask if there is something that ties this together with these issues we're talking about around sustainable finance. So, like Project Ubin, which is now Parture, working with Temasek and others. The work you've done in identity, whether it's just MyInfo or other kind of databases. You guys were very early to put out kind of a framework for artificial intelligence ethics. Is there a common thread here, or are these just discrete things and that don't necessarily interconnect?
No, of course, they have some sense of, they're all, I use the word public good. If you want to make a true end state inclusive digital economy, there are certain public goods to be in place. Whether you say ESG-fintech, which is about data sharing in a trusted way, or you talk about Proxtera, it is about how do you make small and medium enterprise businesses to connect globally. Or you talk about Parture, which is essentially a public infrastructure or private infrastructure for public good to ensure that the whole digital currency and the payment infrastructure becomes a much more sustainable piece of shift. Similarly, for green, we also put another platform in progress called Green Print. And the Green Print platform has got three objectives. It has got three M's: monitor, mobilize, monitor, and measure. Why mobilize is important? Because we want to put a platform, a marketplace where you and me, if we have a great idea about building a software or a hardware or some kind of tools to make the green transition work, it's hard to raise capital today because a lot of the technology are very early stage. So we want to ensure there is enough capital backing this new technologies, backing these changes. So we are putting together a marketplace which will be where we'll mobilize capital for green. Second, is it like a platform? Second, once the capital is available to you, once banks start lending, how do you monitor this data? There has to be a whole set of APIs, processes, tech companies helping us to monitor this deployment of green finance. And the last piece is how do you measure the shift is making an impact? So a bunch of tools and software to measure the impact of this shift. So we're putting a platform called Green Print behind this. On top of that, we also recently launched our grant scheme, almost close to $40 million worth of grant available for companies who are trying to make that shift in terms of building tools, solutions, software, and wants to proof of concept. We put money behind this. Anybody wants to build these tools, we are happy to put our money behind such experiments. We just launched our Global Green Accelerator, where we have promised that the top 15 will find a client for them so that they really build tools and processes and POCs which supports this transition, and willing to put $200,000 behind if there's a POC worth investing, worth supporting. So a lot of incentive in investment platforms, public good type platforms called Green Print, and encouraging industry to start building basic infrastructure from data collection, data provenance, data analytics as part of the shift we want to make.
Is Green Print something that exists, or is it still on the?
We have started building. We have started building the tool, the platform in terms of designing the platform. It's not gone live, but we have an existing platform called API Exchange. We're going to use that platform to build that green platform. And I'm hoping by end of the year, you will get to see some glimpse of the platform.
Okay, well, I'm sure by the next Singapore Fintech Festival, you'll be ready to show some more
we typically will time ourselves to the Singapore Fintech Festival. Right. Any such major platform demonstration or showcasing. So I'm looking forward to get ready before that.
Yes, well, and fingers crossed that some of us can actually visit Singapore for the festival this year.
I am very hopeful, and even if it will be a smaller crowd and if things go well and things get under control, I love to see you at the Singapore Fintech Festival. And I'd
love to be there myself.
Hopefully we can talk more about public good, public infrastructure, interoperable. And we didn't talk about, and one thing we didn't talk about is the whole green finance is data portability. This is like trusted data. We have to ensure the data are portable across multiple sectors.
Well, we'll earmark that for our next conversation.
Yes.
Thanks for your time, Sop. Great to have you.
Good to see you, and stay safe, and hope to see you in Singapore at the Singapore Fintech Festival.
Great.